This is a class on how to buy a home. I am Victoria Henderson. I am the broker and owner of HomeBuyer Brokerage, and I am an exclusive buyer's agent. I'm licensed in Maryland, Virginia, and DC. Lisa Velenovsky Hayashi is a seasoned exclusive buyer agent. She works with me as well at the brokerage and also licensed in Maryland, Virginia, and DC. Ramez, you want to introduce yourself?
Sure. Ramez Fahmy. I work with Caliber Home Loans. Once again, seasoned. I've been originating mortgages in the DC metro area since 1994 and licensed, as I mentioned, in all those other states.
Right. So let's get right down into it. Ramez, go ahead. You can start with the pre-approval process.
Yeah. So typically, this is kind of where you start. You know, a lot of times you're in contact with your real estate agent. They will refer you to someone like myself, and we would sort of get, roll our sleeves up and typically set up a time for a call. A lot of times we're doing now like a Zoom or a Teams call to really kind of assess your goals. And then once we've done that, and we'll talk about the steps of that in later slides, we would turn you over to Vic to kind of set up your search, and she can talk about that.
Yeah, so Lisa and I are, as we mentioned, exclusive buyer agents. And what that means is we only work for home buyers, and we specialize in setting up a tailored search with the criteria that you provide us and with the parameters that your lender has given so that we're not going out of your comfort zone financially.
And I think that with regard to the pre-approval, one of the reasons that we recommend that be your first step is not only so that you understand what your price range is, but frankly, you cannot make an offer in this area without a pre-approval letter. It is part of the offer process.
Excellent point. Excellent. Okay, Ramez, you want to take it from here?
Sure. And as I tell people through this whole process in the pre-qualification, it's better to do all the numbers and stuff up front, because the worst thing you could do is fall in love with a house and then come talk to me and realize that you don't qualify for it or it's out of your comfort zone. So as we get into the end of the process, a lot of times people who are thinking about it start to do things before they ever are in contact with the realtor or the lender. So one of the things that I want to kind of cover in this slide is sort of what can you expect, and what are some things that you might think are good ideas that may turn out not to be good ideas. So I would say first and foremost, and I don't even know that this is on the slide, is communication. You should always be fully communicating and fully transparent with the people who are trying to help you purchase the financing for a home, because we kind of consider ourselves a bit of a dream team, and it's super important that we're all in the know on what's going on so we can advise you best.
Do you want to go through any of? Oh, I lost you, Ramez. Try that again, Ramez. Your audio went out.
Hello?
Yeah, go ahead.
Okay, great. So, certain things that we're going to want to talk about in the process are you're going to start collecting your information, your pay stubs, your W-2s, your bank statements, potentially your tax returns. Know that if you're going to put an offer on the house, you're going to need to set aside money for a deposit. Make sure to let us know if you're going to be getting money from somewhere other than your checking and savings accounts. There's lots of different places where you can access funds, which can be, you could get a gift, you could take a 401k loan, maybe there's a grant out there that you're obtaining. So we just need to know all these sort of things so that we can advise you. Just know that, once you kind of enter into the process, we're going to be pulling credit reports, different things to sort of validate what you're going to qualify for. And we'll cover that in another slide. And also just let us know, like I said, if you're going to be changing jobs and things like that, things that could impact you. But one thing that a lot of people don't know is don't go and close existing accounts that you have without speaking to your lender, because those are sort of things like if you have an account out there that you have a great payment history on that maybe you've had for 5 or 10 years, you just don't use it that much. Once you close that account, it doesn't have the same positive impact on your credit scores as an account that is open. And if anyone has any questions along the way, just put them in the chat and Vic will let me know.
Yeah. The other thing, and Ramez, I don't know if you mentioned this, your audio went out for a second, but don't make any major purchases. I had someone one time show up with a brand new car, and that will definitely affect, your ability, or it could affect your ability to purchase a home. So again, that line of communication really needs to be open with us. You can never tell us too much, because we will make sure that you're advised properly so you can purchase a home.
Yep. So as we talked about, you're going to gather all these items up. What does a lender look for when they're qualifying you for buying a home, right? So typically, like I said, we'll set up a call. So I call it the 5 C's. The capacity to pay back the loan. What's your income? What are your debts? There's certain what are called debt to income ratios that the different programs allow for, right? But as I tell people, don't rely on me to tell you how much you qualify for. Part of it is you're telling me what your comfort level is. I build out those numbers for you, and then we tell you sort of up or down from there how that impacts you. The next thing is capital, right? In most cases, you're going to need money for down payment and closing costs, right? We'll talk about the closing costs a little bit later, but these are expenses that you pay that are standard in in transferring the loan from the one owner, the seller of the house, to the buyer. Different programs have different down payment requirements. Next item is the collateral, right? We'll talk a little bit about that, but that's called an appraisal, right? That appraisal helps determine the value of the home, and your agent will help you determine an offer price, which will, ultimately be validated with an appraisal.
Before we go on, Lily has a question. She wanted to know what an earnest money deposit is. And Lisa, you want to answer that question?
Sure. So, an earnest money deposit is essentially a good faith deposit that you make at the time of ratification. It goes into an escrow account with a settlement company, and it's essentially your way of saying, I am here, I'm a serious buyer, because you're putting that money up in escrow. When you close, that money is going towards your down payment and your closing costs. It's not like that's a separate item. If for some reason you should break on a contingency, that money will come back to you. So it's essentially a good faith deposit that you are making to show the seller that you're serious about going through with the transaction and buying this home.
Yeah. And Lisa mentioned a word, ratification, and that is when you, the buyer, and the seller have come to an agreement and on all the terms at the beginning of the contract offer, and everyone has signed. That is called ratification. And that's when the clock starts ticking on a lot of deadlines that we will get into. But the earnest money needs to be deposited in an escrow account at a certain point. Your financing, your appraisal, your home inspection, everything begins after ratification. Okay,
And,
Ron.
and one other thing about earnest money, just very quickly, people are like, well, how much? How much earnest money? And just to give you an idea, it's different from jurisdiction to jurisdiction, but the expectation in Virginia is about 1 to 3% of your purchase price, and in DC and Maryland, it's 3 to 5%. But based on how competitive an offer is, that number that you offer may change.
Okay, hope that answers your question, Lilia. Go ahead, Ramez.
Yep. So item 4 of the 5 C's is your credit, right? Everyone is familiar with credit scores. We see so many commercials out there. Many of our credit card vendors are offering free services. You can go online to, it's like myfreecreditreport.com, Credit Karma, different things like that. Please know that when a lender pulls your credit report, they are not necessarily going to generate the same score you're seeing on those sites. And the reason for that is mortgages are, right, a very much longer term type loan than, say, a credit card or a car loan. So the model and the algorithms that are built to generate a mortgage credit score are different. And typically I will tell people, if someone tells me I have an 850 credit score, I will tell them, I know that you got that off of your credit card vendor, because in our world, typically the highest of scores out there is 820. But what the credit score is think about it as a report card of your ability to pay your debts over time. There are a number of factors that impact that credit score, which include, most importantly, your payment history, right? So if you pay all your debts within 30 days of the due date, then you should have an excellent credit score, or at least that portion of the credit score. If you have late payments, foreclosures, judgments, things like that, those are things that can put downward pressure on your credit scores. Typically, a lender will require on a conventional loan at least a minimum of a 620 credit score. So that's the absolute typical rock bottom credit score that we would do a conventional loan on. And FHA would typically, and VA would typically allow you to go down to like 585. So they're allowed, they have a little bit more flexibility. That's geared a little bit more towards the first time home buyer. So that's something that, you know, payment history, proportion of balances to credit limits. What I mean by that is, do you have credit cards that are maxed out, or are you a low user of that credit, right? So if you've got a $2,000 credit limit and a $1,900 balance, that's a high proportion of balance to credit limits versus a $2,000 credit, you know, line and let's say a $500 or $600 credit. And typically the balances that are going to show up on those credit scores are going to be whatever your last payment ending balance was. So even if you pay off your bill every month, that is taken into consideration. But if you're always maxing it out, it could kind of look poorly. How long have you had the credit? So that's why I'm saying don't close accounts that you have established credit histories with. Typically, when you buy a new car or you open up a new credit card, typically that's a negative impact on your credit score in the first, say, 5 or 6 months. And then over time, as you show the ability to pay it, then that credit score starts to be more positive, and that's sort of more impactful on you. So that's kind of the credit score. It's very important when determining like whether a loan gets approved or not, and depending on the programs. And a lot of times the rate that you're offered is impactful, because the lower the credit score, the higher the risk is to the lender, and the more risk a lender would have, typically the higher rate. So a lot of times we'll coach you when we do pull your credit and we say, hey, look, you know, maybe your credit score could be a little bit higher. Here are some items that you can consider doing that would increase your credit score. And if you call us today and you're not looking to buy for 6 months from now, a lot of times you can improve your score so that the time comes you are ready to buy a house, that you've done some things that are going to kind of help you along in obtaining better terms.
Boy, that's
and
really
last,
good to know.
yeah. And last but not least is your cash to close, right? So your cash to close is a combination of basically 3 items, right? That's the down payment, whether it be no money down or 5% down or 10 or 20% down. There's that portion of it. Then you have the closing costs, right? The costs that are, you know, go into transferring ownership from the previous owner to yourself. The county gets, you know, and the state get paid money during that transfer. There's what's called title insurance. There's a lot of different kind of fees that are associated with it. And then the last component of it are what we call the prepaids or the escrows. Typically, the lender is going to establish an account for you that you fund with your money up front to pay for taxes and insurance. And depending on the jurisdiction you're in, typically taxes are paid every 6 months and insurance is paid once a year. And so you don't want to get hit with one big giant bill every 6 months or 12 months. So we collect 1/12 of your insurance and your taxes every month to pay those bills in the future. Ultimately, you'll sell the house down the road, and whatever money is sitting in that account that doesn't get used just gets released back to you. Any questions?
Yeah. Any questions? Use the chat if you guys have questions. Okay, choosing your agent. You may have noticed that Lisa and I use the term exclusive buyer agent. There are a lot of names for real estate agents out there. We are actually members of a national organization called NABA, and exclusive buyer agents are very unique in that we only work for buyers. You aren't going to see us listing properties for sale because we don't have any properties for sale. We don't represent sellers. We keep it very simple. Our focus is really on you. Listing agents, listing brokerages, they represent people selling homes. We work for the buyer, and the 2 goals of those sides are different. The listing agent wants the highest and best terms for their seller, and we work to get the lowest price and the best terms for our buyers. There's something called dual agency. It is illegal in many states because there is a potential conflict of interest. It's when a single agent will say that they represent a buyer and a seller in one transaction. We don't like dual agency. Dual agency has to be approved by both people who are participating, buyer and seller. And just a heads up, it is legal in Washington, D.C. and in Virginia.
And I think one thing about that and representing both sides is that they're not really, a dual agent is not really representing anybody because they're very limited in what they can do. They cannot really advise either party because that would be a conflict of interest. So the thing is, it's not really like getting the type of representation you're going to get from a dedicated agent.
Yeah, that's right. Ramez?
So the next few, can you hear me okay?
Yeah, can hear you.
Okay, great. Yeah, so the next few items that we'll talk about are like what types of loans are out there for people to take, right? So when you're buying a house, you're either paying cash or you're getting a loan with some down payment. So conventional loans are going to be your loans that are basically bought by like Fannie Mae and Freddie Mac, and then typically some jumbo loans. But this is a first-time home buyer call, so most folks on this call are probably not going to be jumbo buyers. With conventional loans, you typically can use a down payment of as little as 3%, right? The 3% number typically will come with some sort of mortgage insurance. A lot of people have bad information about mortgage insurance. Mortgage insurance has changed a lot over the years. And if you've got good credit and, mortgage insurance is not nearly as expensive as people make it out to be. It used to be a lot more expensive many, many years ago, but over time, those premiums have come way down. FHA, or what people call the Federal Housing Administration, is a loan that's backed by the federal government. Has a 3.5% down payment. There's a bit more flexibility with regards to, I think I mentioned it previously, with regards to credit scores, debt to income ratios. So you don't have to be that sort of perfect buyer that fits in the conventional box necessarily to qualify for that loan. All of these loans that have less than 20% down, and even with FHA, they require it with 20% down, have some bit of mortgage insurance associated with it. Recently, the Federal Housing Administration reduced their annual premium on the mortgage insurance, making it more affordable for buyers. And last but not least, our veterans. It's Military May, so this is probably a great time to talk about VA loans. If you served in the military, if you're active duty, if you served and you're out and you're honorably discharged, most times you're going to be eligible, or you happen to be the surviving spouse of a veteran who died due to a service-related injury, you qualify as well, as long as you haven't been remarried. And that is a great loan. It's because it offers a zero down payment loan. It's got very aggressive interest rates, meaning positively aggressive, and there's no monthly mortgage insurance premium. They have what's called a funding fee that's associated with it, and depending on whether you're a first-time buyer or a second-time buyer using a VA loan, you would pay this funding fee. Now, if you happen to be a veteran and you have any sort of disability pay that you receive from the military, that funding fee is completely waived anytime you do a loan. So those are the main types of loans. And then under the conventional loans and the FHA and the VA, occasionally there are bond programs out there that are run by the different states or the counties that can reduce, sometimes they're offering down payment assistance or slightly lower rates. So we'll always kind of check all those out for you as well.
This is what we have a lot of home buyers ask about, and they are different programs. Maryland State has programs. There are programs for the city and the county, depending on where you're buying. Baltimore City, if you happen to be buying there, they have a lot of programs available for buyers. The best way to give an overview of this is to say that wherever it is that you're looking for a home, once you determine that area, Lisa and I kind of fine tune and look to see what is available, but so does Ramez, and that's kind of Ramez's specialty as well. So Ramez, if you want to pick up as to what the programs that you're involved with.
Yeah, so some different programs. So think about DC, there's called DC Open Doors. There's another program called HPAP, and not every lender participates in these, but we do participate in most of them. The entire state of Maryland has, it's called the Maryland Mortgage Program. They've got different products where they have down payment assistance. There are some programs where if you have student loans, that help you pay down student loans. Certain employers participate within these Maryland mortgage programs where they'll give you sort of additional funding. In DC, there's certain tax credits, right? If you're a first-time home buyer, you make below a certain amount of money, you can be exempt from paying your transfer taxes, which in DC can be a pretty big number, and that'll help you pay closing costs. And sort of last but not least, you see where it says 203K mortgage rehabilitation. So we offer a suite of different programs where if you find a house, it's in the neighborhood that you like, it's got all, a lot of the attributes that you want, but definitely needs fixing up. Not only does FHA, but conventional Fannie Mae and Freddie Mac have loans where we will lend you the money to make the renovations to the home as well. A lot of that is funded through an account that pays directly to a licensed contractor. So you can't do a loan like that if you're like going to do all the work yourself. But if you have a licensed contractor, you can do that loan up front when you purchase a home, or down the road after you've purchased a home, you can always come back to us, refinance, and do one of these renovation mortgages to make the house exactly as you'd like it.
And, we're aware that this is a lot of information. And so that's why, again, we stress the communication. We're going to keep communicating things to you. We don't expect everybody to take notes and then just be on their own understanding all of this. Every step of the way, we present, a kind of an outline of what to expect next. So just wanted to let you know that so that there wouldn't be an overwhelming feeling. Okay, so how much is all this going to cost? Ramez, you want to start with the first part?
Sure. So I know that Vic and Lisa mentioned the earnest money deposit. That's the money that binds the contract, that keeps sort of everyone involved. And they mentioned the percentages. We talked a little bit about the down payment and the closing costs a bit, and what that is. And the closing costs and the prepaids are typically something that like sort of we will disclose to you very early on. When we have this discussion and we're qualifying you, I'm going to share estimates with you. We're going to hop on the phone or on a video call and go through them. This is what this fee is for. This is what this fee is for. And typically, a lot of those fees are going to be pretty standard in most jurisdictions, and really just change based on like the sales price and the loan amount of the home that you're buying.
Lisa, would you like to talk about home inspections and the inspections in general?
Sure. So in your contract or in your offer, you will have the option to ask for certain contingencies, certain protections in the contract for you. And the most basic ones include the home inspection, where you have a certain amount of time to bring in a licensed home inspector to kind of evaluate the home and determine whether or not you are satisfied and want to stay in the contract. Radon, especially out in the outlying counties, radon levels can be kind of high. So you can also have a radon test done to determine whether those levels are above the EPA accepted levels. And if not, have remediation done. And remediation is actually fairly inexpensive, $900 to $1,000. And if you have a contingency, the seller would pay for that remediation. Pest inspection, looking for wood destroying insects. Well and septic inspections. Obviously, if you're on a property that's not on public sewer or public water, you're going to want to have these inspections done to make sure that these systems are functioning and that there's no bacteria in the well and that they are safe.
One thing I'll add to this is that Lisa mentioned the EPA. Very early on, we will send you information about all of these things. Radon is very scary, but there's a very easy fix for it. And so you'll have information ahead of time on exactly what typical time for an inspection and who pays for the appraisal. Very good questions, Benita. Time for an inspection. I'll answer that, and I'll let Ramez answer the appraisal question. We try, because right now there's limited inventory for housing, we try to make your offer as appealing as possible while protecting you in the process. So with that in mind, we try to schedule that home inspection very quickly, meaning that we try to get it done in 4 days or less. What that means is that we get a home inspector out to the property. You need to be there. So because this is the person you've paid for to do the inspection, and they're going to tell you all about the house. They get that done. They write a report. It is a nice thick report with pictures. Lisa and I go through that with you. We determine whether we're going to ask for credit, repairs, whether you're going to be okay with doing some of the repairs, or whether everything looks great. whatever it is, we put this on the response, an inspection that addendum that details everything that we've covered in that report. We ask them, as I said, for repairs or credit, and then we get that back to them within that 4-day, if we've written 4-day as the time period, within that time period. Once they have it, they have several days to respond to ours, and it goes back and forth until you either come to an agreement on those terms or you don't like what has been going on and we get you out of the transaction.
Great. And then the appraisal, the buyer pays for the appraisal. So typically that's the one expense that we will collect from you upfront in the transaction. And the appraisal can cost anywhere between, say, $550 and say $700, depending on how quickly it's needed. But all these expenses that that I'm talking about are going to be in that 2.5% to 4% of the sales price. And when you see 2.5%, that's typically going to be on more expensive houses, and 4% is going to be on lesser houses. And the reason the percentage is higher is because a lot of the costs are fixed costs, right? So an appraisal costs the same typically whether you're buying a $150,000 house or a $900,000 house. So as a percentage, it would tend to be higher.
And Lily had a good question. Yes, we do have recommendations for home inspectors. We think that we work with the best because we vet it pretty well. We're out here all the time doing it. We also have recommendations for electricians and plumbers and contractors. And so yes, we work very closely with some of the vendors. And if somebody doesn't perform very well, then they come off of our list.
And also, Vic mentioned that it's important that you need to be there because you really need the context from the inspector. If you just see the report with the pictures, you might freak out. Whereas if you were with the inspector, you might realize that something is not that big a deal, but it doesn't appear that way in the report. And the other thing is we're there with you. We're not going to make you go to the inspection yourself. We are there with you for the inspection or inspections.
Right. Wants and needs lists. This seems to be pretty self-explanatory, but the reason that we've added this in is because it kind of isn't. So, you come to the table and you say, this is what I need. I need single family home, 3-bedroom, 2-bath. I got to be close to public transit. And what I want is a big backyard, back deck to entertain. What ends up happening as we start going out and looking at properties, in fact, it's happening today with me this afternoon, and that is all of a sudden that big backyard is now a need. It isn't a want. So that shifts and changes, and then I adapt the search because now I am looking at all these properties and going, yep, this won't qualify for their now need category. So this is a moving target. And I just want to let you know that it's great to have a list, but don't be surprised that if it changes a little. Lisa, you want to add anything?
Yeah, I find when I'm working with clients that need list starts out generally very, very long. And then, it adjusts as you determine what you actually need versus what you would like. And I think that's one of the reasons that, we at the beginning, especially, we think it's great to see a very, very wide range of properties, even some that maybe, for instance, you want that big backyard, but the opposite is that maybe you see that a backyard on a townhouse with a lot of open space will work perfectly fine for you. So that's why we really like to start broader and
Yeah.
then kind of bring it in after you see property.
Yeah, really good point. Yeah, about the open space too. Yeah. Determining the value. Okay. Determining the value is obviously the most or one of the most critical things that we do. And what we do is we use the multiple listing service, which I call the mothership of information. This is where all listing brokerages put homes for sale. And that information is in that MLS, and then it disseminates out to, places like Zillow and all the other sources on the web that you can find properties. Now, what we do is we go in and we try to find a home in the same geographical area, same type, square footage, number of bedrooms, etc. And we call these comps and we send them to you. We go back about 6 months because that's the best determination of value. And we go through that with you to determine what your offer price should be. And there are many factors involved, location, the lot, square footage, and of course, the condition of the property. And Ramez, you want to?
Sure. I'll answer these questions. And Benita, I see your question and I will answer it. So once a contract is written, right, we receive a copy of that contract. And then, obviously your realtor is doing their job to assess what they believe the value is that's going to win the contract. But then the lender goes and they get an appraisal done. Slightly different than the realtor's ability to give you names of, inspectors. Lenders are required to follow what's called a home valuation code of conduct. So we use, at the company that I work for, we use an appraisal panel. So these are vetted similar to the inspectors and that sort of thing. List of appraisers who call in certain markets and are very zip code specific as to where they'll go. A lot of sort of your much bigger lenders, your online lenders and things like that use these appraisal management companies, and they send appraisers from all over who cast a much wider net, who aren't necessarily as sort of geographically centric as sort of the folks that we use. But the appraiser, as Vic mentioned, will go back, they'll look at the size of the home, they'll look at, where it is, when it's sold, and make adjustments for all those items, because not every house is exactly going to be the same. Sometimes when you buy condos and townhouses, there's the same models, built, there's only 2 or 3 models in each project. But, as you get into different homes, different people update houses. Some people haven't updated their homes. An appraisal is done and the lender uses that to decide how we're going to lend. And then what we typically base our lending standards on is we're going to use the lesser of the sales price or the appraised value. So if an appraisal comes in higher than what you offered, right, then that's great. That's built-in equity in the home for you. If for some reason the appraisal comes in lesser, we're going to determine our down payments and all that sort of stuff off of the lesser of those two numbers, right? So if you have an appraisal contingency in your offer, it gives you the ability to go back and renegotiate. Now, occasionally, people will pay a little bit more than what they've offered because they really want the house. They know how competitive a market it is. So my job is to, when you're making these offers and these contingencies and things like that you may or may not have, is to tell you, if you remove this contingency or you do this, this is the risk that you're putting yourself at. And then it's your decision to decide, do I want to take on that risk or not? My job is to tell you what might, like if this happens, then this is kind of how we would address that. Are you okay with that before you go in and remove one of these contingencies? But so and then that appraisal report that's generated, we will share that with you, and then you do with it what you like.
Yeah, we help you along with that as well.
Basic
components of an offer. So we have the sales price, which we pretty much went over, the settlement date, and that's the date when you become the owner of the house. Working with the lender, we determine how long that lender needs to meet all the different contingencies in the contract, and then make it to settlement. Someone like Ramez, who is going to be vetting you really early on in the process, we can close very quickly, meaning 3 weeks or, but the typical amount of time is about 4 weeks. If you're flexible with that date, sometimes a seller will need flexibility. And if it doesn't matter to you, you can be gracious and say that you have flexibility and offers whatever it is that they need while not really costing you anything. The earnest money deposit, we mentioned that goes into an escrow account early on in the transaction. There are benefits to having a higher earnest money deposit. That makes the seller feel more comfortable if you can show them that you have cash that you're putting up front, showing that you can do this transaction and that you're committed or earnest to it. Lender letter. Every offer is going to have a letter that is associated with that offer. Ramez generates these lender letters, and they certify that you're pre-approved for the loan and that you can move ahead. And then we also connect the listing agent with the lender so that they can communicate and say, yep, this person is good to go. The home inspection contingency, we've mentioned that. It allows you to have the home inspection within a certain number of days. And then there are the financing and appraisal contingencies. They offer protection. As Ramez mentioned, if an appraisal comes in lower than what you offered and you have that appraisal contingency, we go in and negotiate with the seller listing agent and say, drop your price, or we follow whatever you want to do in that situation. But very often, if it comes in under and you have an appraisal contingency, we can get them to lower the price to the appraised value. Lisa, do you want to add anything?
I think the only thing that I want to add is, sorry, is a more general comment and something that Ramez said. It's that we are here to guide you, help you, make sure it's a smooth transaction. But ultimately, the decisions are yours. We are here to provide you with the options and unbiased information so that you can make an informed decision. I mean, that's part of being a buyer's agent. We pride ourselves on educating our buyers. So we're helping you to make an informed decision.
And then if I can just mention one thing about the lender letters, and one of the kind of the big benefits of using someone like myself versus, your big banks and your credit unions and your online lenders is we will make sure that the lender letter that we're providing to your agent is available to them on the weekend if they want to make an offer. And typically we are going to make the letter property specific, right? Because it does us no good to get you a pre-approval letter for $600,000 when you're trying to negotiate on a $450,000 house, right? Every house is going to be a little bit different. And it's also not good to have like a stale letter, meaning a letter that was written a month ago, right? Because interest rates change, things like that. So, Vic, Lisa, they know how to reach me. They know that we're going to get them the letter typically within an hour of their request, whether it be on the weekends or not. We're available to speak to listing agents on the weekends because that's when a lot of these transactions are done. And if you're dealing with sort of one of those sort of business, banking hour type lenders, you're not going to have that sort of same responsiveness as far as getting questions answered when something needs to be done on the weekends. So
I will say that a lot of this does happen in the evening and on the weekend. Okay, so writing your contract offer. We use standard contracts that are pre-written by real estate lawyers, and there is variation in what we use. If you're in Howard County and in Northern Maryland, there's something called the Maryland Association of Realtor contract. In the greater DC area, there is it's called GCAR contract, which means we can use it in DC and Montgomery County. There's a Northern Virginia contract, but essentially they are all the same things. They're just different formats. The sales price is determined by the buyers after we carefully consider the comps, the location, the competing offers, and again, working closely with Ramez. Every contract is going to be different. If we write more than one contract for you, you'll see how different they can be. Once the buyer and seller agree on the terms of the contract, it's a ratified contract, and that starts the clock on the contractual dates or timelines. And we have a few questions. Lilia says, when living in an apartment with a lease coming up, when is the best time to start looking for a home to buy and put in an offer? Good question. I'm doing this right now. I would say number one is whether you have a month-to-month lease. And Ramez, do you want to add anything? Volume's off.
So I'll attempt to answer a couple of questions on here. So the question about leases and things like that, to me, the earlier you start the process, the better. We can always update documents. But typically when you buy a home, so for example, when you made your May 1st rent payment, you covered your rent through the month of May, right? From May 1 to May 31st. When I made my May 1 mortgage payment, if I own a house, that covered the previous month, that covered my April accrual of interest. So when you're buying a house and you're closing in May, your first payment's not going to be due until July, right? Mm-hmm. So kind of keep that in mind just when you're talking about your kind of cash flow. Right. But I think starting the search sooner than later is better. It just gives you more opportunity with where inventories are these days. I mean, if you're looking online and reading and speaking to your agents, there's not a tremendous amount of inventory out there right now. So you should always kind of be looking for the right opportunity. And as Vic mentioned, depending on the flexibility of a seller, they may need a few months to get out because they haven't moved, or they want to keep their kids in school through the end of the school year. But then there's some houses, when you walk into them, they're vacant, and those people want to move very quickly. So just know that there's some flexibility out there. And, I think starting your search and narrowing your search before your lease is up is important. So that way, once Vic will then be able to fine tune her search and Lisa. So a lot of the discussions have already occurred. And once a house is ready and that you like, you can then pounce on it.
Right.
There was a question about, what if I don't like the rate that I have, right? So this is a big conversation that we have now, right? So as everybody knows, interest rates were, in the 2-3% range during the pandemic. Those days are over. Today, interest rates are probably sitting closer to 6%, which is still historically very low. It's not, 2.5 or 3%, and we may never see those days again. We're not likely to see those days again. But if you listen to a lot of economists, they believe that interest rates will drop towards the end of the year and into next year. If there's a recession, typically what happens is rates come down. So yes, look now, because if a lot of people will say this to me, I'm going to wait for rates to come down. Well, if you say that, how many other people are saying that, right? And with the shortage of inventory, nobody needs more competition in buying a home. So if you find a house that you like, buy it. Let's get the interest rates that are available now. And none of the loans that we do or that we will talk to you about have any sort of prepayment penalties. So you could refinance in 6 months from now, a year from now. And we can always bring that rate down for you when the time comes and when the opportunity presents itself. And when we do that, we're showing you, okay, well, this is what the cost of the refinance is going to be, and this is how much you're going to save every month, and it's going to take you this long to make up those costs. So there's another question about rent to own, right? Yeah. So we don't really see a lot of that. It's been many, many, many years. People who want to sell their house, and people who want to rent their house, rent their house. There's typically not like kind of that sort of like middle ground. We used to see a lot of it more like, I'm dating myself now, like in the 90s, when there was a tremendous amount of inventory, right? There weren't a lot of buyers. It's going to be more when it's a much more of a buyer's market, when that comes up. But right now, like I said, most people who want to sell their house can sell their house. And if it's decently priced, nobody isn't going to necessarily want to take that offer on, because there's so many other people there who would just kind of want to take it off their hands. So
I will say that if you do see something that is rent to buy, just let us know. And the part of the question was, how do you pay for our services? In a rent to buy situation, I have seen one, I think 2 years ago. They offered what's called the cooperative commission, which would pay for our services. But it's unique. It doesn't come up very much. Lisa and I are looking at the multiple listing service literally every single day, and I can count maybe 3 times that I've seen it in 16 years. So it isn't a very common thing. Would you agree, Lisa? Yeah. Okay. All right. Your offer has been accepted and you have a ratified contract. What now? Oh, wait, got another question. So my good time to ask or answer. Okay. So next will be the clock starts ticking. Lisa, would you like to talk about this, or did you want me to cover it?
No, sure. Now that I'm not choking anymore, I'm happy. I'm happy to do it.
Glad to see you're still with us. It was a little rough there.
There are a number of deadlines written into the contract, and time, of course, is of the essence, but you don't want to miss any of these because then you could put yourself in breach of contract, which puts your earnest money at risk. So it's very, very important to pay attention to the deadlines, which we will keep you on track. I mean, once you have a ratified contract, we become sort of like a project manager to make sure that we're in touch with everybody and we make sure that things go as smoothly as possible. But deposit of the earnest money, that generally takes place very soon after ratification, usually 3, 4, 5 days that you have to get that money. A lot of settlement companies have the ability for you to transfer it electronically, but that happens very quickly. A loan application and required documents must be submitted to the lender. If you have not already signed your loan application with the lender, you essentially have 7 days to do it under the contract. Your contingencies need to be fulfilled. Home inspection, we've talked about this. Any other inspection contingencies, wood destroying insects, well or septic. The pest inspection doesn't have as much of a deadline, but the others do, and you need to make sure, and we'll help you find the people to do those inspections. Appraisal, generally, we're looking at 7 to 14 days in this market or less if you have an appraisal contingency. That's why it's important to have signed off on your loan application, because the lender cannot order the appraisal until you have signed off on that loan application. And the longer you wait, the less chance you have of getting that contingency done. Financing contingency, once again, that really depends on the lender. It depends on the terms of your contract. That can be anywhere from 14 days to 30 days to whatever. But we will keep you on track. Condo doc, HOA doc review. If you're buying a condominium or if you're a homeowners association, there are, and they have to let you review these documents. But we have another slide that talks about the time frame for that. But this is your ability to review the governing documents and budgets for the area you're buying in, and to determine whether or not you are comfortable with those, and you have the ability to break without penalty on this review period if you find something that is not to your liking. Review approval of lender closing disclosure, that needs to be, I believe, Ramez, at least 3 business days prior to close.
Yes.
So he will send that to you. It has the final numbers for the closing, well, usually final numbers for the closing, and you need to sign off on that. You need to be signing off on that no later than 3 business days prior to close. And then, of course, settlement. You want to be there on closing day so that you become a homeowner.
That's right.
Yeah, and do you want to just quickly run through my piece of that?
Yep.
I'll just take a second here. So in most cases, we've done all the preliminary paperwork, right? We've, through the pre-qualification process, I've asked you for your pay stubs, your W-2s, your bank statements. We've pulled your credit. Sometimes we'll need to update that information. But my goal, right, is to be able to have you make the best offer. And part of making the best offer is having these contingencies very short, because a seller doesn't want to put the contract at risk any longer than they need to. So Lisa mentioned some of these sort of like standard timelines. In a market like the one that we're in right now, we need to shorten those timelines as much as possible, so that way the seller is clear of any hurdles of getting their house to settlement sooner than later. So when typically we'll ask you for all the information up front, like well before you even have the offer. When we send you out that application, we'll say, hey, in the meantime, we need you to upload, updated pay stub or a new bank statement. The last one you sent me was in February. Now I need the, I need the April, statement. We will ask you to do that right away. We'll submit the loan to underwriting. Typically, the loan is approved within a couple of days. If you can offer, think about if you were selling a house, the customer that I'm representing, I'm telling them they can have their loan approved in less than a week. The other lender comes and says, oh, we need 30 days or we need 21 days. Who are you going to take, right? Same thing with appraisal contingency, right? As Lisa mentioned, can't order the appraisal until after you've signed the application. You've had what's called an intent to proceed. We order those. Sometimes if we know we're in a competitive situation, we'll say, hey, you know what, let's pay an extra $150. Let's get an appraisal rushed and let's get it back in 7 days versus 15 days, right? Think about how you as a seller might interpret that. Same thing with the financing contingency. You have the ability to review condo docs. We'll talk a little bit about it in the next slide, but a lender will also we have a massive due diligence that we have with regards to condos and co-ops. I think there's another slide where I can talk about that. And then that closing disclosure. Up front, we give you a certain set of numbers, right? In the end, those numbers can't be too terribly different than what I disclosed to you up front, or the lender might be on the hook to make up some of those costs because they're trying to protect against back in the wild west days in the early 2000s when there was lenders out there being unscrupulous with appraisals and with regards to numbers. People were showing up to closing and they needed $8,000 more at closing because the lender decided to throw in a last minute fee. In today's world, that doesn't happen. And then ultimately get you to closing smoothly. We want to take all the stress and the pressure out of this. So we try to be very organized. And I think Lisa used a perfect word. We're like a project manager, right? And we're there to navigate you through that process.
Yeah, good. The home inspection. So we kind of covered this before, and we will be talking about this with you quite a bit. We have highly recommended and qualified home inspectors. There's a certification called ASHI. I believe all of our home inspectors are ASHI certified. It's a national certification. They're licensed. Termite inspection is very often part of the home inspection unless it's in a condo. But again, each one is different. Radon. Inspectors look at everything and they tell you what's right, what's wrong, and they also tell you how things work. So that's why it's important that you're there. They'll tell you where the main water shutoff is for your house and where the electrical panel is. And they give you the detailed report with photos, usually a day after the inspection. And then we go through it with you. And then we write up our addendum, we toss it to the other side, and they look at it and they go, oh yeah, we'll accept all these terms. Or they say, oh, we don't like this and we don't like that, and they toss it back to us. Then we meet with you again and we go over it and we toss it back. I'm in the middle of one of those little games right now. And eventually, it either comes to an agreement or the deal is voided. Lisa, you want to add anything?
This is once again just an aside. If you're in an extremely competitive situation, and we've talked about these short time frames, there is such a thing as a pre-offer inspection where you will have your inspector come in and they do what's essentially called a walk and talk for an hour and a half, still going over all of the major systems and the condition of the home. But it gives you the ability, if you're satisfied with the outcome, to submit an offer without a home inspection continue.
Oh, very good point. Condos and HOAs. If you purchase a home in a condo or an HOA, there are mandatory review periods to evaluate these documents. This is really, really important because you have to agree with and abide by whatever the rules are. Washington, D.C., the period of time to review these docs is 3 business days. Maryland, as you can see, 7 calendar days, 5 for houses. And in Virginia, you've got 72 hours. So the minute you get those documents, you're going through them. The review period, thank you, Lisa, for putting this in, it begins the day you receive the documents. Ramez, you want to jump in here with?
Yeah, so outside, so most of these review periods, and I'm going to talk now not about homeowners associations, but condos and co-ops. You have the ability to review those items. Typically, you're going to look at like, what are the rules? Am I allowed to have a pet? Am I allowed to paint my space? There's obviously more to it than that. But a lender is going to do a deep dive into the financials of the project, the financial stability, the structural stability. I think everyone knows this story a few years ago about these condos in southern Florida, that the one that collapsed and the people died. Well, the industry took that very seriously. And we are looking at, is there deferred maintenance? Are there special assessments? We're even looking at the meeting minutes, right? So if we see that, money is being set aside because all the patios are crumbling, maybe we don't want to be doing a loan in there until all those units have been kind of repaired. Occasionally there'll be some sort of litigation. If it's a litigation between, one of the owners of the project and the project, we don't really care about that as long as it's not our unit. But things that have to do with structural stability and soundness, a lender can say, look, we're just not going to lend in that project. And we will let you know as early in the process as possible. We request the decks, the bylaws, the budgets, and we also send out a condo questionnaire to say, okay, how many people living in this project are renters? How many of them are owner occupants? And we have our own set of rules out there to sort of, govern those and our ability to lend in those projects.
Hey, Ramez, do you want
Yeah.
to say something really quickly though about like if you're getting an FHA or VA loan and you're trying to buy a condo?
Yeah, so there's a list out there that has approved condos that FHA and VA have already approved, right? Some of those have expiration dates, so occasionally we have to update them. But typically, things that would impact Fannie and Freddie's, or not Fannie, FHA and VA's ability to lend in those projects might have to do with rental restrictions, things like that. So if you happen to be a veteran, right, and your project doesn't allow you to rent your property out when you move out of it, VA is not going to approve that project. When you think about the folks in the military who are, every few years get, sent to a new duty station or they get deployed, that would be an issue. But we have a very big condo project review team where if a project may not already be FHA or VA approved or conventional approved, we know how to get those projects done. We know how to deal directly with the agencies if we don't have delegated authority to do those. So you'll let us know. We'll look up the project. We'll see if it's approved, not approved, and we'll get back to you on that.
I think I just skipped one. Final steps. Hold on a second. Oops. Wait a minute, everybody. You're seeing behind the curtain. Okay, final steps. While you're under contract, you're going to get a lot of documents from your lender. We ask that you respond to them as quickly as possible. The person that is in the background we haven't spoken much about is the settlement attorney. This is the team of people or the person that you will have that is checking the title to make sure it's free and clear of any liens. They order a boundary survey, location drawing. They make sure that everything with the property is you have the ability to purchase it free and clear of problems. They also talk about different kinds of title insurance. They coordinate all the funds. They frequently hold the escrow money. So this is sort of like, I would say, the last person or on the team that really brings it all together. About 3 days before settlement, the lender, the title company, everyone gets what's called the closing disclosure. It's reviewed to make sure those numbers are all exactly the way they should be. You, of course, get this as well. And then the title company sends out the wiring instructions on how to send the funds, transmit your funds for the closing. Want to jump in, Ramez? This is kind of your wheelhouse.
Yeah, so I mean, I think we've talked about this a bit. If we're doing everything quickly and ahead of time and I'm disclosing properly, typically you're going to see this closing disclosure, well in advance of the 3 days, unless you're doing a 14-day closing and, these other things need to occur. And then we'll send you instructions on how monies are to be sent. Typically, the title company will send their wiring instructions. Typically, they don't want checks anymore just because of fraud and that sort of thing. But generally, it can be a very quick process, but it doesn't have to be a frantic, disjointed process. If the project manager, as Lisa said, I'm going to use that a lot now, has done their job properly and you have the right team in place, then it should be a smooth process. And the reality is, we're not advertising on TV and things like that. So we want to do a great job for you because you're our biggest referral source for the next transactions that we're typically doing. You had such a great experience with us. You're going to tell your friends about us. And that's how we've always grown our business in all the years that we've worked together. There's no exchange of money back and forth with us. That's illegal. So the best thing that we can do is put our best foot forward during the transaction, do a great job, and that experience sort of will typically generate great reviews and typically future customers, whether you have a relative who's buying or you're buying your next house, right?
Mm-hmm. Yeah, that's true. Settlement day, that's the day when you've been aware of all the deadlines. We've prepared you for every step of the process. There really shouldn't be any surprises. Probably the biggest compliment I think I ever got was when a client said, "Wow, we're done? That really seemed pretty easy." So that's really amazing. So we do the final walkthrough. We make sure all the repairs have been completed, and we have a question, or no, we don't. Okay. Um, we, basically we work with that closing attorney, and we facilitate the smoothest transaction possible. Lisa, you want to add anything?
I just was gonna, as you said, sort of the one group or one party here we didn't really talk about is the settlement attorney or the title company, the same thing. And that is something that you select and is in your contract. And we use a number of really fantastic settlement agents and closing companies. And so that's how we can be such an effective team, because we have all their trusted parties that we've all worked with. And once again, that's a selection that you can make. We can offer you various companies to take a look at, but we work with really trusted partners as a pretty seamless team.
I encourage you to call, have all your questions ready, and we can get you where you need to, with regards to the process, whether you're buying in a month from now and a year from now. It's good to have that conversation sooner than later.
So thank you all very much for attending our home buying class. We really appreciate it.